probably what you're used to seeing if you're brand new. But if you've come to some of our classes, let me tell you, you probably understand what you're looking at when we change it to the candlesticks. I'm going to pop it right back here to candlesticks. If you want to know more about what they mean and how to use them, you want to take some of our courses. Our courses will teach you all about these candlesticks. We actually prefer them to the line because they give us a little bit more information. But let's talk about what we're seeing here on the chart. So we're at an all-time high right now, and that can be very bullish in the market. It can be something that's really fun to see, because when you have a all-time high, sometimes that gets people excited and it drives it up even higher. However, that's not always the case, right? Sometimes you can get to the top of a trend, and you might be seeing us at the top of a trend. The fact that we've got some positive market tone, the market's moving up, it kind of even jumped up a little bit. I'm going to zoom in just a little so you guys can see what I'm talking about. When you zoom in here, you'll see that we've been seeing some mostly positive market tone for the last couple of months, for sure. But here we got a little jump up. It even just made this tiny little gap, and then it's continued up so far today. A lot of people will say, well, look, see, this is a hot market. This thing's going to go up. However, I want you to understand why we're seeing this up movement. There's news out about the Federal Reserve. The Federal Reserve is the entity that is controlling the interest rates. You might say, well, why are they control interest rates? Well, what they're doing is they are trying to fight inflation. That's a good thing. Many of you have already felt inflation in your daily lives. Gas is more expensive. Groceries are more expensive. Just about everything is more expensive. And if you're feeling it in the pocketbook, don't worry. The Federal Reserve is trying to fix the situation. And the way they're doing that is they are raising interest rates. You say, well, how does that fix inflation? Well, the dynamic with inflation is that your money is becoming less valuable. That's why it doesn't buy as much. That's why gas seems more expensive. We tend to think of the price of products as going up. We don't typically think of the value of our money as going down, but it's the same thing. Prices are going up because the value of our money is going down. And the reason why the value of our money is going down is there is too much money in the market. You go, well, that sounds like a good thing. Shouldn't there be more money? Don't we want more money? Think of it like this. Things that are rare are more valuable. Things that are abundant are typically less valuable. So a diamond is more valuable partly because it is rare. Something that you can get at the local corner store, like a fidget spinner or a pack of gum, you can get those just about anywhere. And for that reason, they are abundant, and therefore they are not very expensive. The same thing can happen to your money. Your money can be abundant. There can be so much money out there that the value of that money goes down. And that's what's happening to our U.S. economy and our currency right now. During COVID, we printed an unprecedented amount of money, an absolutely absurd amount of money. And that is why we've been experiencing inflation to the degree of which we've been experiencing it. So now the Federal Reserve is beginning to increase interest rates. And by increasing interest rates, what they're doing is they're raising the cost to borrow money. So they're saying to us, if you want to get money from the banks, it is now going to cost you more to do so. We understand that when we think about interest rates. We usually ask, what's the interest rate when we take out a loan? And so while they're raising those interest rates, what we are seeing is inflation begin to combat this. So we're trying to raise the value of our money by making it harder to get the money. We're, in a sense, reducing the abundance of it. And so that's what's going on. Now, today, here's the news in the market that the Federal Reserve may be at the peak of its interest rate hikes. It may be at the top. If indeed it is at the top and they determine that they do not need to raise rates anymore, then they will begin to look for an appropriate time to cut interest rates. And when they cut interest rates, that will make money a little bit easier to get. And that will stimulate our economy, and we will see the economy get a real boost. Now, that's great. And that's why the economy is starting to look a little good today. That's why the stock market is up a little bit, because the stocks and other people who are investing in those stocks, they say, oh, well, if they start cutting interest rates, businesses can work faster. Businesses can grow more. So this is going to be great. Let's go buy stocks. So everybody's going and buying stocks right now. But they're doing so in anticipation of interest rates being cut. But interest rates aren't being cut just yet. Jerome Powell of the Federal Reserve has not told us that he's going to cut interest rates. He has said that they will begin looking to a time in which they can, but he has indicated that they may be at the peak of their interest rate hikes. So that's at least a shift in the Federal Reserve policy. Instead of let's keep hiking interest rates, let's keep making money harder to get, let's try to make it more expensive. Now they're starting to say, well, we may have reached the peak, so let's leave it alone for a while and let's see what happens. They are discussing that we might see some interest rate cuts in the future, perhaps as early as next year. And there's even speculation that maybe we would see 3 interest rate cuts next year. That would be pretty significant. So what do we do as stock traders? We wait, we watch, and we analyze. So let's analyze the current market trend. Let's take a look at what the market's doing. And let's just look at the chart as a whole and see if we can get an idea of where we might be in our current market trend. Now notice this market has been truly quite hot, just moving up. It gave us this little stair-step pattern type feel as it's been moving up towards what could be a new resistance line. There are a couple of other lines that I want to bring to your attention. We recently blew through a pretty strong horizontal line. That's significant. That's something to really take note of. And I'm going to zoom out even more here so that we can see that there is yet another horizontal line that we've got to be aware of. I'm going to see if I can draw that in here for you guys just real quick. Let's see here. See if I can get it to draw in. I'm going to have to reset my tools real quick. There we go. So we'll go here and we'll draw in the line right there. Now, right in here, you'll see that there was a horizontal price point that the market was moving up against and having trouble getting through. It did finally poke up through it briefly back in December of 2021, and then it crashed from there. And for the majority of 2022, we got a little bit of a recessionary feel here. This thing was really trucking down. But in December of 2022, it kind of stopped going down and began going up really in November, even halfway through November. And then through December, it just kept moving up. And it's been moving up pretty much all year for a year. Now, you go, okay, that's great. If this thing's moving up, maybe I want to get in. Well, if this was our first year of bullish move, we may start seeing some messy market tone where the market tries to go a little bit sideways. And I'm going to add a little bit of room to the end of the chart here so I can kind of play that out for you. So right in here, we're getting close to what could be a new resistance line. Do we know that it's a new resistance line? No, we don't yet, because at Tradeway, we'll teach you, we want to see at least 3 bounces on these lines. Right now, we have a total of about 2. And this is one, this is one. You might make an argument that this back here is a 3rd bounce, but that's part of the old downtrend. So we'd really like to see a true new bounce right here. If we get it and we get a little bit of negative market tone, then you might, as early as next week, maybe just after the holidays, you might see this thing start to retrace down a little bit. Partly because what people will do is they'll say, hey, we just bought up all these stocks expecting that maybe we'll get interest rate interest rate cuts next year. So if we're going to get interest rate cuts, I want to be in on the action. I want to buy these stocks and I want to see the stock market move up. But what could happen is next year they say, well, we do plan to look for interest rate cuts, but we're not ready to do it yet. If that is all they said, that would be enough to drive this market sideways for a little bit. So you might see it kind of come up, hit this top line right in here, and then start moving sideways. You'll notice we are right against this horizontal line from 2021. If we drew in another horizontal line right up about here to show the highs from 2021, you'll see that we're actually getting pretty close to that as well. So maybe we get a little bit more move up to that line. Oh, I zoomed in a little too far. Here we go. Might get it up around to this line. It would not surprise me if we see this price action come all the way up, hit this trending line right here and the horizontal line, maybe even together. It might even ride this up, hit here, and then crash. Wouldn't be surprising, especially because we're getting into the holiday season. A lot of people are going to be not trading. They're going to be just off spending time with family, traveling a little bit and stuff. So you'll see, I suspect, lower market tone. You're actually already starting to see that lower market tone, lower participation in the market. So what you'll see is down here at the bottom of the screen, you should be seeing volume bars. These volume bars are telling me how much people are trading. Well, notice the last couple of days, we are seeing a significantly reduced amount of volume. Significantly reduced. That means there are a lot fewer people buying this stock. It also means there are a lot fewer selling it. And so if more people buy than sell, what we'll see is the price of the stock market move up. We're looking at the S&P 500, which is kind of a representation of the stocks as a whole. It's tracking 500 industry leaders, large cap stocks. And we're seeing that it is moving up, but it's doing so on very low volume. So what does that tell me as a stock trader? That tells me it's moving up, but not with a lot of conviction. It might look like conviction because look how hard it's moving up. But even back in here, as it moved up, there is a greatly reduced trading volume, right? And it increased slightly right in here, got to about an average trading volume, then it dropped really low again. So all this movement that we're seeing in this recent retracement up in the market is on significantly lower volume than usual. And that tells me that I've got to be cautious. Got to be careful about just jumping into a stock market like this. I want to see that the chart moves up around these lines. I'd like to see it get through them if I'm trying to buy stocks. If I'm expecting a market to retrace or go down for a while, then I would like to see them bounce off of it. Personally, I'd like to see this thing go down for a little bit. I think we need to shake out some more bulls, let the bears take over just a little bit and let this thing go down, at least to get a reset before moving back up off this line. If indeed what we're seeing is a continued uptrend, I'm ready to see it come down and get a new bounce for that uptrend. So as we begin to look at the stocks, keep in mind that the stock market is reaching highs. And because it's reaching highs, it may not be the best time to buy. You don't want to buy when it's high. You want to buy when it's low, right? Buy low, sell high. Really appreciate you guys being on here. And John, I see your comment there. There's about a minute delay. But if you guys want to say something to me, I got a couple of more minutes. If you have any stocks that you'd want me to just check out real fast, type them into the chat or into the comment section and let me know. I could check out a couple of stocks real quick just to give you a quick analysis on the stock. Can't give you any stock advice on what to do. Not going to tell you to go and buy or sell any particular stock because you got to get involved with Tradeway to do that. Some of you aren't students yet, and that's okay. We'd love to have you as students. So come check out some of our courses, get involved with some of our coaching staff, and let us walk you through some of your first trades. John, I appreciate you being on here, and Merry Christmas to you as well, my friend. Hope to see you guys on here more often. Like, subscribe, hit the notification bell, make sure that you don't ever miss these lives, because you can get a quick look at the market and we will give you kind of a synopsis of what's going on. And it'll give you an opportunity to do it in a very short amount of time. Some of us are pressed for time, especially around the holidays. So we want to make sure that we use our time as efficiently as possible. Okay, I see on here, I've got a question from Doc. Doc, what do I think about MYO? Let's just go take a look real fast and we'll see what pulls up. MYO, here we go. Myomo. All right, so Doc, what we're looking at here is a pretty low dollar stock. With the market as high as it is, I'd be careful about getting into some low dollar stocks just because typically, and this one has been very low, practically in the penny stock range for the last few, really last couple of years. But I see that it's starting to get a little bit of traction. What do I think about MYO? I think there's not enough data here for me to go, all right, I'm ready to trade it. But I do like this recent action. I mean, you've got a pretty significant bump in the action here. So maybe they've received new funding. That typically will make something like this happen if they've got a new partnership or some new funding, some access to capital that could boost the company for a little while. But what you'd really like to see if you're thinking about investing in any kind of stocks, you want to see that the company's got a good track record. Now, I do notice here that according to their earnings, they've been getting earnings beats consistently. That's good. That's a good sign. That may be why they were able to score whatever has caused this move up here. If it was new funding, if it was a new partnership of some sort, it could be because they are consistently meeting or beating their earnings projections. That's a good sign for this company. So is MYO something to watch? Well, absolutely. Watch it, right? Might be a little bit soon to pull the trigger, at least for me, because I trade with a particular set of rules in a system. If you want to learn what those rules are, and you want to learn a system or develop a system of your own trading style, we can help you with that. You just want to check out some of our courses and get involved with our coaching staff. So there you go, Doc. I like the action that we're seeing there. It's not that heavy of a move up, but I mean, it's something. It's something to watch. All right, we'll do just a couple more real quick. Jose, I see you there. Shop, SHOP, and then we're gonna cut it off for the day. All right, you had a little bit of a uptrend moving on Shopify. Is that what this is? Yep, Shopify. Had a nice little uptrend in here, but it's broken that uptrend. So if it's me, I'm waiting for a new pattern. I'm waiting for a new pattern there, Jose. If I get a new pattern, maybe I go, all right, I'm ready to look at this for hopping in and trading. And then we got NVO. NVO, let's take a look at that. And then we'll call it quits for the day. NVO. Wow, look at that. That's actually a really pretty pattern right there. I'm kind of liking what I see. It's a gappy stock. It gaps. So that's something to be aware of. All that means is that the stock will sometimes close at one price point and then jump to another like it did right here. That's a very significant gap. There's a little less significant gap in here. But I do like that while it gaps within its pattern. What do I mean by that? Well, if I draw support and resistance lines here, you'll notice that even though it gapped, it stayed within the pattern that it's making. So I kind of like that, especially if I'm thinking about trading it, because I want it to move quickly. I want to buy this stock and have it gap way up on me and then sell it for a profit. So I do like it when stocks do that. This one is doing that. It's something to watch for sure. I might bring this top line down just a tad to pick up some of these tops. It's at a good bounce here on the bottom. So, I mean, from a purely technical standpoint, this thing it looks pretty good for a potential buy point. But there are so many other factors that you want to take into consideration before buying a stock as well. You want to look at the fundamentals of the stock. You want to make sure that you're lined up with market tone, and keep in mind the market is at a high right now and it may be nearing a turning point. So that would make me take pause and go, maybe not yet. So good find there, though. I like the pattern that you found. Ozzy, great job. And guys, this was fun. Thanks for being on and being a part of the live trading. If you want more of this, if you want to really dive in and get lots of stock analysis, I mean, we just did 3 real fast. If you want to get a whole bunch of stock analysis, you want to be a part of our program. We actually have the live trading hour every day, Monday through Thursday, I believe, from 2 p.m. to 3 p.m. So for a whole hour, we are just analyzing stocks on the fly. You want to check that out. You want to be a part of our coaching programs, part of our educational products, because when you do that, you're going to get a much deeper understanding of the stock market. I believe that you'll have at least be exposed to a much deeper understanding of the stock market. We want to give you as much value as possible. So thank you for being a part of this. I went a few minutes over. I wasn't supposed to. Sorry about that. But guys, I was having too much fun with you. I hope now that you have a little bit of an enlightenment on what the market is doing, why it's going up. I hope now you feel like I got a better understanding of what to do or how to think about the market. And I really appreciate you being a part of the Live Trading Thursday. Can't wait to see you again next Live Trading Thursday. I don't know if it'll be me next time. It might not. But if it is, I'll see you then. And then I'll see you in the market. Take care and have a fantastic afternoon.